The Reserve Bank may be comfortable with rates where they are, but the major banks are not. In a week where the Big Four have raised or are preparing to raise rates, Reserve Bank minutes reveal the board sees no pressing need to move on official rates. It wants to let the current stimulus filter through the system, but is open to further cuts if the recent run of promising economic signs prove to be a false dawn. Desley Coleman reports.
Talking to mortgage holders about what sort of loan to have, it's clear there's a tough choice between fixed and variable.
Because if you fix them, they punish you. If you don't fix them, they punish you anyway.
It's hard to decide because you're just wondering how long it's going to go for, and it could reduce more, but I'm not sure.
The decision won't be made any easier with some mixed signals between what the Reserve Bank is saying and what the big lending banks are doing. Published today, the central bank's latest board minutes reveal that members were comfortable keeping rates at 49-year lows. However, another rate cut was not ruled out, the minutes saying the RBA would leave adequate flexibility to respond to developments as needed.
They don't have a strong view on the recent run of data and the improving situation in financial markets, but they're certainly signalling to us that they're very comfortable with the current level of the cash rate at 3%.
I think that barring a renewed bout of negative data, I think that they're firmly on hold.
But for the major banks, it's a different story. Last week, the Commonwealth Bank increased its standard variable rate by 10 basis points. Although a small move and just bringing it into line with other major competitors, it raised concerns about the floodgates opening. Borrowers' nerves would have been tested again today after the National Australia Bank and Westpac Bank both increased their fixed-term home loan rates.
I think rates have bottomed. In terms of the commercial banks lifting their fixed rates, look, the yield curve's steepening. There are global influences on longer-term lending rates.
So far, I think the rise in term rates has largely been related to improving economic conditions around the world and here in Australia, and that in itself suggests less need to cut rates here.
In the meantime, analysts say the RBA will be watching the bank's mortgage rates and the unemployment level. If they both creep higher, the RBA could well cut the cash rate further. Whichever direction rates go, some homebuyers remain philosophical about staying on the property ladder.
Just keep working, that's it.